Hello, everyone, and welcome to episode 54 of Two Amazon Sellers and a Microphone. Today, Chris and I have a guest with us, Dave Story from Amazon FBA Build to Sell. Dave, glad to have you on the show. How are you?
Hey, Dustin, glad to be here. Hi, Chris.
Yeah, nice to see it. Well, thanks for coming on. I'm really curious to learn some stuff about you. I've watched some of your videos, so this will be good. This will be good. Dustin and I are both sellers, and I'm curious to see some of the little tricks and secrets you have. So this will be good.
Yeah, I mean, and Dave, your company's all about helping people exit the Amazon space. So this is something that's super fascinating to me and Chris. I mean, when we started our businesses, I believe you started around the same time, which we'll talk about, around 2014. It's about the same time Chris and I started our businesses. And exiting was not even in my mind. Like, just to plan to build something and exit, we didn't even think about it. It was only maybe a year ago that I started to see the value and what people were selling their businesses for. So I'm super excited to talk to you about what you're doing and how you're helping people really exit at a high value. So, but before we get into all that, Dave, why don't you just give us a little background, how you got involved in the Amazon space, how you ended up doing what you're doing now with AFBTS. Just a little background would be great.
Yeah. So this all started, I've been in UK manufacturing companies, some world-class companies for 20 years. And I always had a dream to start my own business. I ended up as an operations director in a big company, and I thought, here's my opportunity. I saw a way to get out, and I went for voluntary redundancy, and I thought, right, I'm going to go and start my own business. I just happened to bump into one of my ex-bosses from another company, and invited me down to his one day for a chat. I said, shut the door. And he says, I'm really, really busy. He says, but here, he handed a bit of paper. He says, here's a password and login for Amazing Selling Machine. I said, the Amazing Selling Machine? He says, yeah. He says, log on when you get back. So I went back home. I was a bit confused. I logged in and I started watching Matt Clark, and I was addicted. Like, I couldn't stop watching it. I watched it all night. And this was ASM 2, I think it was. And I rang him up the next day, and he says, do you want to go into business? I says, yeah, I do. And I just thought, this is crazy. I've never even heard of like making money on Amazon before. This is just absolutely crazy. One day, didn't know what I was doing. The next day, I'm to start an Amazon business. So that's what we did. So set away, and those days were very different, and had fantastic success selling in the automotive niche. Built a really strong automotive brand. Had bestsellers in USA, UK, branched out into Canada, into Europe. So we're doing really, really well. And I went to go and get the business valued. I think it was early 2017. It's worth about $3 million at that time. And we thought, right, well, let's just keep going. We're doing well. Let's just do more of the same. But that turned out to be a big, big mistake. Things had got a little bit out of control, and lots of competition started coming in. And the business wasn't on the sound foundations that it really should have been. And long story short, things went badly wrong in 2017. I had to strip out products, and it wasn't a good, happy place to be. And so I thought, right, let's get the business valued again. Went back to the broker, and he said, it's pretty much unsaleable unless you want to have this much, which is a very tiny amount. And I says, no way. I says, so that was a real devastating blow for me. And spent the next 6 months learning from brokers, business buyers, business sellers, what it takes to really make an Amazon FBA business highly saleable and increase its value. And the things that I learned in that time, and it took me another year to implement those things, by the way, were things that I'd never really thought about before. They're not in any of the trainings out there. So put all this in place, and fantastic. Got the business back on its feet and had a 7-figure exit in 2019. Great. And after I exited, I thought to myself, do you know what? There's going to be so many Amazon sellers out there that were in my position that don't know all this stuff because it's not being taught out there. And you can only learn the stuff as you go through the process yourself. So I decided to put this training program together to help Amazon sellers. So my mission now really is to put this knowledge back into where I was, where lots of sellers will be, and provide them with the tools, the process, the knowledge, so they can build better, more valuable Amazon businesses and have bigger exits. So that's what I did. So the training program's called the AFBTS, Amazon FBA Build to Sell.
Very good. Very good. There's some things I want to unplug right there. So real quick, you started the automotive niche. That kind of blew my mind, because a lot of people would go to like the more popular niches like the babies and the home and garden. So automotive, was that just because you're familiar with automotive products and the automotive niche, or did you do some product research and find something?
Just did product research and found something. We had some fantastic products. Doing tremendous numbers. Yeah. So they were best sellers, so it didn't matter they were in automotive.
And this is 2014, is that right?
Yeah,
14,
we started with one product in 2014, grew into 2, 3, 4 in 2015. By the time 2016 came, that was it. The floodgates opened. Had loads of cash and just spent it all on product launches and
And let's and how many SKUs did you have? How many total products? You launch a product, launch another product. How many total products did you have when it was at its best? When you were doing, a 3 million valuation, how many SKUs was that?
About 15.
15. Yeah. And then what happened between
marketplaces as well?
Okay. And what happened between that 3 million valuation and when it was basically unsellable? Give us that, like, highest high. You were doing really well. Things were going awesome. What happened there that made that business go down? I'm sure competition came in, but elaborate that on a little bit. What happened there?
Yeah, it was a mix of things. There's the competition driving down the prices, making PPC more expensive. There was some quality problems which we had on some of the new product launches. Didn't go as well as what we thought, and they coincided with all this competition increase. Probably spending too much on launching, giveaways, going crazy. Thought we could get to the number one spot with these other products. Just went over ambitious, I suppose. Yeah, the success kind of must have got to our heads a bit, and went a little bit overboard on that. So I would say more than a little bit, quite a lot overboard. They were the main things. So I spent quite a lot of time working out which of the products we're going to keep, which are the ones that were gone. So with the cash we generated from the ones we kicked out, so launched some new products, and were much more careful this time with the launching, and that's how we grew it back up with better products.
I think that happens, like that whole story. I think that happens with a lot of sellers, right, Dustin? Would you agree? Like, we all launch a lot of products, and then we find, like, okay, let's reel it back in a little bit and focus on like these core products and scale back up. I mean, I can speak for that happens to me. I feel like that's a problem a lot of sellers have, is they want to keep scaling, keep launching, and they forget that they got these other SKUs that they need to continue to grow as well.
Dave's story exactly happened to me. I mean, it was almost a bad thing that my first product was my home run. Like, my first product that I launched in 2014 was my best seller, and you think you can replicate that, and at the same time you're trying to pump all this money into these launches of new products, your main product is getting squeezed. Like, my profit margin kept dropping on my main product. It sounds like a really similar story to what Dave's talking about. And then you're stretched way too thin. And that's you're right. That is such a common story. I want to unpack, because I think it's fascinating. Before we start talking about just getting into the exiting part, you rebounded from that.
Yeah.
And so, Chris and I, we've had similar stories also, and we've rebounded somewhat. And I just love to hear what you did to help rebound from that low to get to where you could sell.
Yeah. So I had to shrink back down and then go back up steadily. That's the basis of it. But the little bit of detail behind that, I developed a financial forecasting tool to help me, which had a view of 24 months out, and was able to put all the ASINs I had into the tool and forecast all the demand out. And I worked out which ones were going to be the most profitable, which ones to drop, which ones to keep. And I used this tool going forwards to work out everything to do with the new product launches. So it really kept a really tight control of the cash and tight control of it to utilize it best to optimize the growth. So I used that tool, which is part of the program now, which I'm offering to sellers as well, which is a fantastic tool. That's one of the things. Other things was just a sort of consolidation of the business. The European markets weren't doing that well for us, so we pulled out of those. So yeah, and really focused on UK, USA, and Canada was doing okay. So that was it really.
So you were at like those 15 SKUs or so number of SKUs. You brought it back down and just focused on a core number of SKUs, and then just scaled those back up and just kept rolling in the funds and keep scaling them up.
Brought it down to about 6 or 7 and then build it back up to 10.
Got it.
But the 3 new ones were really careful with the choices and everything to do with quality. Everything was like never before. There was a real focus on making sure those products were successful, whereas before it was just throw them up.
I am guilty. I am guilty of that. Like Dustin and I are both guilty. Like we've launched product and we keep launching. I had like 30 SKUs at one point, and what we found is you didn't have enough cash to reorder the other SKUs. Like you couldn't keep going, so you just had to liquidate everything. So I am now in that same boat that you were in, where we're kind of consolidating down. We're going to focus on like 10 to 12 SKUs, and we're just going to continue to milk those as much as they're worth. To try to keep the business moving and try to be very cautious of what we launch, because now we understand there's capital that you need to launch products, right? Like you can't just throw it up there and get sales. You're gonna have to put some money behind, a couple $1,000s at least, just to get these things moving.
Yeah, it's amazing how much cash they draw up.
Oh, super amazing.
Yeah. There's no doubt. Well, let's talk now more about preparing to exit, because this is where I get excited. And this is also where I feel like this is a weakness of mine. That's why a service like what you're doing can be very helpful, because just what you laid out, like a 24-month forecast. I would like to think that way, but I'm much more like I get excited about a new product and I want to go for it, and I don't forecast it out. So let's talk about number one, just sort of what you're doing right now with your clients in your course, and walk us through what it would look like to help prepare us to exit our businesses.
Yeah. Well, one of the key things I say is start with the end in mind. Okay? Which I didn't at first, I admit I didn't, and I don't think that many people do, because, I've taught lots of sellers. I've helped over 40 sellers now increase their business value and prepare for their exits, and some have exited. And there's very few of them, 1 or 2 maybe I've spoken to, actually have the end in mind, the end game, that they want to sell the business. So if you have the end in mind, that means that you have a value that you want to sell your business for, and you have an approximate time scale. And you can overlay this into this financial forecasting tool that I have, and you can work out essentially a rough idea, which is far better than having no idea, by the way, what you need to do to get there. Yeah. So how many products you're going to need. Yeah, and this you work on it every week. So every week you go in and you update the data and you see where you are. You revise the forecast, see how much cash you've got, and you work on it, and it gets more and more accurate. And you've got a far greater chance of hitting the goal than not having it, or even, of course, having no goal at all. So that's one of the keys is just to have the finances forecasted out and working your plan in terms of financial plan using that tool. But there's so many other things that can be done in it, or need to be done in an FBA business, to make sure that you have a successful exit and make sure that you maximize the value of your business and make it more saleable, so buyers will love to have your business. So one of the other key things I say is walk in the shoes of a buyer. So focus on your business, looking as if they were thinking about what would I want to see in that business, not what you would want to see in that business, because normally these are completely different things. And in order to do that, you have to learn what a buyer actually wants to see in the business. So that's part of the training program. There's a big module on that, learning all the stuff, the things which make your business more saleable, the pitfalls that you shouldn't go into, which is a lot of them. And that really sets you up for the way you think about your business, and it'll change the strategy in your business, change how you think about growing it. If you think about it in terms of that.
So start with the end in mind. Let's go on. Let's focus here on that a little quick. So, I want to sell $100,000 a month, right? That would be that's my end. That's my goal. $100,000 a month. From what I'm understanding is, how do I get to that $100,000 a month in revenue? I need to focus on the products that are going to generate enough revenue to get to that $100,000 a month in revenue. Not so much focusing on like smaller wins or like individual products, but I want to focus on products that are going to continue to get sales daily to get to that $100,000 a month in revenue, which is kind of what you're kind of saying here is like start with that end in mind. So instead of working like sellers do, they'll or like a product research, they'll find a product and they'll start from the beginning and like, hey, here's what I'm going to do next. Here's what I'm going to do next. If I'm going to try to get to 100,000, I need to get a certain amount of revenue for a certain number of products and work backwards. So I think that's where some people are they don't teach that really. It's more about starting out at the beginning, finding the product and working your way towards the end rather than start at the end and work your way down.
Mm-hmm. Yeah, I wouldn't advise going for a revenue target. I would advise going for SDE, which is the seller's discretionary earnings, which is essentially your net profits plus add backs. And add backs are things which you may spend in your business that a buyer wouldn't necessarily or probably won't spend in the business. And you get those added back on your net profit, it becomes SDE. And you've got to work that out. The business is valued on the trailing 12 months of that SDE. So the point of your sale, whenever that is, it stops, and it's the 12 months. That's what my tool does. It allows you to focus on that value. So if you focus on that value, that means all the decisions you make, all the products that you choose are all optimized to make sure you get the best SDE, which means you get the best value of your business, not necessarily the best turnover. It's more obviously about profit as well.
That's an interesting point to talk about profit essentially versus revenue. Because you could, I guess, have $100,000 a month coming in with no profit, and so that would lessen the valuation. What is the typical multiplier on an Amazon business right now? What are they? What's the market look like? What are investors willing to buy businesses for right now?
Typical multipliers. So the multipliers then multiplied by the SDE to get the value. Yeah. So if you had an SDE of 100,000, multiplier of 3, your business is worth 300,000. So typical ones that are going at the moment are 2.5 to 4.5, and the difference between those depends on many factors, which you will learn through my training program. Once you know these, you're able to then drive these factors into your business. So for example, one could be probably the most major one is selling in a period of optimum growth. So what the tool allows you to do is sees your growth curve, and if you sell on this period where your growth is high and you're still going up, never ever sell when you're just about to plateau off, because you'll go into due diligence and your buyer will see the business plateauing off and your multiplier will drop through the roof. It'll be terrible. So you sell when you've got, I recommend at least 6 months growth left. So you could go into a long due diligence and you don't want to be dropping off. So that's the most major thing to get the best multiplier. Other things that are really are good at getting the high multiplier are unique products, obviously, not just Me Too products. Mm-hmm. And the other one will be having different sales channels. So if you do have Shopify, if you do have some eBay sales or other maybe channels, anything really. What the multiplier is essentially a measurement of risk for the buyer. If if there's very low risk, then they're going to give you of getting their return on investment back, then they're going to give you a high multiplier. But if it's the opposite, they'll give you a low multiplier. So that's one of the most major things you think about risk when you're thinking about walking in the shoes of a buyer.
What value does products that have subscribe and save add to a business? So if I do subscribe and save orders, and I always get repeat purchases, I got people, multiple subscribers, hundreds of subscribers a month. What's that look like?
This is kind of another area, but you can break past the 4.5 multiplier with those type products. You can break it 7s, 8s, even possibly higher, because that's essentially you're guaranteeing the future sales of your business. It's low risk. So you can get a really high. If your business model is subscribe and save, that's another ball game. That's something you can get really high multiplier on.
That's interesting. that is fascinating. Oh, man. There's so much in this. I like the idea of looking at it from an investor's perspective as well. And I thought it was fascinating. It's almost counterintuitive to exit while you're still ramping up, for a lot of people. But I mean, if you're putting all of your money back into your business, I mean, you're not really making a whole lot of money during the time you're building this, and your exit's going to be where you make all of your money. And if that's the best point to do it, that's interesting, because I think it'd be tough to convince people to sell when things are getting better and better and better. But that's why
it's one of the classic pitfalls is to sell too late when things have begun to plateau off, because most products and most Amazon businesses have like a life cycle. The product life cycle will go up, and then the competition comes in, your profits drop. Unless you are really, really aggressive at introducing new products, then that will happen to most Amazon businesses. So if you do it too late, then that's one of the common pitfalls. But also on the other side, common pitfall is selling too early. So when I work with sellers, there are normally 3 major things that they can do to really drive and increase the value of the business. And what's happening at the moment, this new marketplace that's opening up with these business buyers, so the aggregators that are buying portfolios of businesses, is that they're being really aggressive, and they're getting, I would say, very good deals for them, low multipliers. Sellers haven't really maximized the business out, and they think they're getting a good deal, and they're not really. If they've done these 3 things, would have really improved the value of the business. So that's selling too early.
Interesting. Yeah, there's been huge groups now that are buying businesses, Amazon, like crazy. Let's talk one thing about just the structure, like how your business is organized, how you're incorporated. What's the importance of all of that early on so that you're preparing for an exit?
Yeah, it's less important if you sell to one of these new aggregators, because they have a very defined process. They know what they're doing exactly, and they know how to distribute buy the assets, and they mainly do asset purchases. But if you're more old school and you're selling to someone that's buying your actual shares of your company, then that can be more important that your company's structured in the right way. Complex structure, let's say you were, maybe you were from the UK and you incorporated and you had a branch in the USA, you had some in Europe, that's just gonna cause problems, and it take more time in the due diligence phase. So
how much does brand make a difference in those? Like, do sellers need to start focusing on creating a brand, or is it more just like create some products and flip it and go on to the next one?
That's an interesting one, because the assets that these new aggregators buy are essentially your ASINs. They're just running their ASINs, but I think brand is always something that you should focus on. Personally, I think a strong brand, strong message is only going to get you repeat customers. And if these, you know, in the future, if another business wants to do something with your products and they're under the umbrella of a brand, let's say sell them outside Amazon, of course, it's far more powerful to do that. I don't really advise any strategy other than focusing on a strong brand and image for your Amazon business.
So I said a quick question. You're talking about these new aggregates that are buying up. They're just buying not your account, but just your ASIN. And is
they're buying your account, the ASINs, and any other assets associated. So your, let's say, trademarks, contracts with any suppliers and things you've got. So they're buying all those assets, if you like, but they're not necessarily buying the actual company that you're currently running those assets in.
Gotcha.
An asset purchase.
Gotcha. That makes sense. So it's fascinating.
Buying all these Seller Central accounts and just kind of keeping them all.
And they can do it. They're closing these deals in 30 to 45 days, you know.
And yeah. And you think sellers that are going that route are losing out on potentially selling for more because these guys are
especially if they haven't done the key things to maximize the business before they go to sell. That's another pitfall. You know, you just rock up at a broker or a business buyer and think you're getting a good deal for your business. The true value is added to your business in the sort of 12 months. You know, if you've got a real plan, a 12-month exit plan, or even longer, you know, you can really push and make sure these things are.
I think we cut out a bit there, Dave. Sorry.
You know, if you really want to get the maximum value of business, the aggregators really, they're also sort of leveraging on the fact that they can do a really quick deal, and they also have got lower risk on earnouts because they've got a big team behind them. And if you do a proportion of the deal as an earnout, then they're far more likely to succeed, and you get a good value back on the earnout in the future because they know what they're doing. They've got big teams behind them running Amazon businesses, and they're successful.
Wow. I want to get your opinion.
Balance that with the cash on the sale.
I want to get your opinion on like how to add more to my multiplier. Like I want to, like if I'm currently at a 2.5 multiplier and I do 5 figures a month in revenue, how do I increase my multiplier to a 4? Or what do I need to do to increase my multiplier to a 4 for the next time I want to sell it?
Yeah, there's lots of things that you shouldn't do and lots of things that you can do. I mean, I'll go. I've already mentioned some of the top ones. Well, the top one was the selling on the period of growth, having new products. But also, for example, one you shouldn't do is have, which I did at one point, I think you did by the sounds of things, have a hero product. If you've got let's say you've got 7 products and one of them's driving 70% of the sales, then that's just a risk. You know, if that product gets taken down or something, that'll lower your multiplier. If you distribute your sales across those 7 products evenly, that you're going to get a better multiplier. There's less risk of things going wrong.
I get it.
That's interesting, actually.
That's a good point.
Yeah. That's another one. Another common pitfall, and I've just spoke to someone the other day that had done this, and they've had to back out the sale of their business because they've realized they've made a mistake. It's quite common, I've seen this a few times, for sellers to think that releasing lots of products, in the buyer, just before you go to sell the business, the buyer seeing you've got all these products you've got about to release. That's not good because, as you know, on Amazon, there's no product guarantee to succeed. You know, you have to go through a trial phase, and then you eventually see where the sales are going to lie. So that's going to lower the multiplier. Plus, the products have got no sales history, and you've also eaten into your SDE because you've launched the products and put cash into them, and you haven't returned on your investment. So that's a pitfall. Then you can lower your multiplier.
Something I'm seeing here is, you know, less risk, high multiplier, more risk, low multiplier.
That's the name of the game, But there's so many things that you can do to manage this risk, you know, make it lessen. and the pitfalls make it more.
Well, let's talk about now. If someone wants to work with you, what does it look like to get in with your training? How do they sign up to work with you, and then what does that process look like?
Yeah, so I think you've got the website open there. There's a webinar, masterclass webinar. I think there's a link at the top. Yeah, there.
Excellent.
So you can watch the webinar and and see if you're interested in talking to me further from there.
And his website is afbts.com. You go there, check it out. At the top right corner, there's a section that says free training. You can click on that, and there's a little webinar he's got for you. Dave's got for you, talking about your strategic exit, your blueprint, and how to add some figures to your business before you sell it.
Yeah.
You also got this, what I noticed is a pre-exit checklist. Talk a little bit about what that is.
Yeah, the checklist is just I think it's a 55-point checklist. Just to say, if you do all the things on this checklist, then you've really, really got a business which is optimized for salability and value. It's really that's really just to open the eyes of Amazon sellers out there to see how much there actually is, that you can do in an Amazon business. And it's not something that you can do at the last minute. Of course, it takes time, and this is why I say start with the end in mind. I build businesses now. My new FBA businesses are built to sell from the outset. I'm thinking down these terms.
This is great. I'm going to be downloading this as soon as we get the call, and hopefully I have some of the boxes checked. That's my goal. I hope that I have some of them checked. But it's fascinating. I love just the whole approach that you talk about. Is start with the end in mind. That's going to have. I'm going to sort of shift my mindset to that for sure.
Start with end in mind and then make plans.
Yeah.
And then a plan. I'm from a background of planning, so the trap that people fall into with plans is that plans change. So they think, it's rubbish. I can't be bothered with the plan. But that's the whole essence of planning. Okay, you're constantly every week checking the plan, adjusting it with new data, new information, and you don't change the goal. Of course, you change the way that you get there, the strategy. So that's planning. And that's what people fail to do from my experience. For
sure. Yeah. I'm more impulsive. That's just one.
I think a lot of us are like Amazon sellers. We just keep going and finding new things and we don't even think about selling at the end. Like if we worked our way backwards, we probably would be a little bit better off.
Well, this has been great. We appreciate just all the insight and just opening. Hopefully this is going to help sellers that are listening open their eyes to what's possible. I think it's shocking sometimes to see what these accounts sell for. I mean, it's amazing when you talk about multipliers like that, what you can do and how exiting might be very smart. So again, if they want to get your masterclass or get in contact with you, it's afbts.com. Is there any other ways that they can find content of yours or hook up with you on social media or any of that?
Yeah, I've got a Facebook group. It's called FBA Exit Plan.
Okay.
Yeah.
All right. Well,
I've got a YouTube channel, Dave Story. Find me on there. You can find lots of interesting videos on there, information.
Well, we will certainly be checking all of that out for sure.
Right.
All right. Well, I know we've taken up a lot of your time today. We appreciate everything. So fun to have you on the show. We'll have to have you back on again. We'll do a deeper dive into some.
There's lots of stuff we could deep dive into. I just want to leave you with just one more thing. The greatest thing your Amazon FBA business will ever do for you is sell.
That's interesting. I like it. Mic drop. Yeah.
Awesome, Dave. Well, thanks for coming on, man. We appreciate it. We'll definitely be in touch. Check him out on LinkedIn as well. and we'll have to have you back on because you got some value here, and I think some sellers could definitely use it. Thanks again.
Great to have me on. Thanks a lot.